when we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity.
In today's news recap, gold price nears record as markets await PPI report. Will weak U.S. jobs data force the Fed into a rare jumbo rate cut this month? Gold remains close to record highs as traders await key U.S. inflation data and a possible Federal Reserve rate cut. Weak jobs data, a softer dollar, and central bank demand are fueling gains, with forecasts suggesting prices could approach $4,000 next year. Gold prices remain near record levels as investors closely track U.S. inflation data and anticipate the Federal Reserve's next policy move. The combination of weaker labor market signals, a softer dollar, and expectations of interest rate cuts has created strong momentum for the precious metal. Gold prices approach record highs. Spot gold rose 0.8% to $3,655 per ounce, not far from Tuesday's all-time high of $3,674. U.S. gold futures for December delivery gained 0.3% to $3,694. Analysts note that expectations of rate cuts combined with signs of cooling in the U.S. labor market have boosted gold demand. Senior analyst at Active Trades, Ricardo Evangelista, said the latest rise comes on the back of expectations of Fed rate cuts, supported by signs of cooling in the U.S. labor market, which have weakened the dollar. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Yeah, I think your comment, the gloves are off. I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into COMEX and LBMA and said, "Here's $10 billion, I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. Mm-hmm. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries together step up. And the Achilles heel to the Western system is the fractional reserve nature of the entire system. But the way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. Seas. The rest of the world wants to get out from under Uncle Sam's boot, if you will, by using dollars. They don't want to use dollars and they'd prefer not to be in the SWIFT system. I mean, ask Vladimir Putin. The U.S., the West, stole 300 billion plus of U.S. treasuries going back to, 2023, October 2023. And you can look at a gold chart. The following day after that news came out, the price of gold started going higher. It's been like a tractor in first gear. The pullbacks, or what used to be smashes, have been very, very shallow. And here we are, we're breaking out, we're new highs on all-time highs on gold, 14, 15-year highs on silver. We're entering a new phase right now. And I think that new phase coincides with the Western bond market. Think the Western credit system is faltering. And it just makes sense. If the credit system's faltering and everything is based on credit, you want to move your assets into something that cannot bankrupt. And that's gold and silver by definition.
In today's news recap, will silver's explosive rally drive prices to $50 this month? Silver climbed within striking distance of $42 an ounce on Monday, posting its strongest rally since 2011 as a deteriorating U.S. labor market reinforced expectations of a September Fed rate cut. The highly anticipated non-farm payrolls data confirmed a sharp slowdown in job creation, with unemployment rising to the highest level since 2021. Analysts at GSC Commodity Intelligence are now pricing in near 100% odds of a 25 basis point cut on September 17th. The possibility of a shock 50 basis point jumbo rate cut has also emerged, a move that could send precious metal prices into the stratosphere. Silver has already surged plus 47% year to date, more than doubling in value over the last 3 years. The momentum is unmistakably bullish. Data tracked by GSC Commodity Intelligence shows a steady rise in speculative longs, while flows into physical silver and ETFs continue to accelerate. Wall Street desks are openly discussing the possibility of $50 an ounce by year end if institutional allocation expands further. Every indicator we track is flashing green, says GSC Commodity Intelligence. Institutional positioning, ETF inflows, and physical demand are all converging to create what we believe is the most powerful setup for silver in more than a decade. Silver is not alone. Gold has already surged plus 35% in 2025, hitting a new all-time record high of $3,646 an ounce. Analysts at Goldman Sachs now forecast a run toward $5,000 an ounce. That's a plus 40% gain from current levels. For context, 1 ounce of gold was just $35 in 1971 when Nixon closed the gold window. Today's price represents a 103-fold increase over 5 decades. The verdict from GSC Commodity Intelligence is emphatic. Those who position now will capture what could be the most profitable super cycle of our generation. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
With the amount of gold that was coming into Shanghai, was many, many, many multiples of what the government has raised. What are they at? 3,200, 3,500 tons, something like that, China officially. The real number absolutely has to be over 25,000 metric tons, and that's triple what the U.S. says we have, and we haven't audited since 1956. So I think clearly China has way, way more gold than they say they have. I think probably Russia too. And just go back to the old saying, he who has the gold makes the rules. And that's what they're preparing for. They're preparing for the dollar/bonds, treasury bonds to implode. And that if a country has no gold on their books, on their balance sheets, then they're stuck with that black hole of loss. Whereas if they've hedged and now have a good sized position in gold, what they lose on dollars, they're going to more than make up on gold.
Yeah.
If you were talking about silver rather than gold, I mean, there's no big silver. You can't make any big purchase of silver. I mean, it's not available. The world's been in a deficit for 5 years. The deficit is widening. And I mean, you can see it. You can see the demand in both gold and silver by looking just at the front COMEX month each month, because you have, and I'll just use a round number of 100. You have 100 contracts standing for delivery day one, and by the end of the month, it's 150 or 200 contracts. And I know you remember very well, Andrew, the days back when there would be 100 contracts standing on day one and only 23 standing by the last day. You know, you'd have a lot of the front month contracts would bail out, they'd sell them and cash settle. That's not what's happening now. You've got buyers that are presenting their contract and say, hey, give me the metal. One tool, COMEX futures, let's just use the word derivatives. They were able to bully the price of gold, bully the price of silver downward, while bullying or helping the prices of assets that they wanted higher, like bonds and stocks. They could bully those higher. The problem is, well, first off, let me just go back and say that I believe, and I think, tell me if you disagree or not, I believe that the contracts were originally issued, as you mentioned, to increase volatility, scare people, but also as if you want to call it a pressure relief valve on the buying of physical gold and silver. I said the same thing when GLD and SLV were created. I viewed those as pressure relief valves. I mean, they don't have to own any physical metal. They can have all contracts. And I'm going to go one step further, and don't know whether you'll agree or disagree, but I believe that the crypto market was created as a pressure relief valve from gold and silver, because they are viewed as an alternative, a dollar/currency alternative.
But
what do you think of Holter's take? Do you agree with him? Is $50 silver by the end of the year a realistic target? Post in the comments section down below your honest opinion and share this video with a stacker. Now subscribe to the channel and check this video right here because you'll love it. I'll see you on the other side.